Alright, what's going on, boys? We got a market recap, trade recap today for Tuesday, May 20th. I took an L today. Price action has not been the best the last few trading days. Coming into the beginning of this week, I knew that there was no news. No news Monday, no news Tuesday today, no news tomorrow on Wednesday. Took a loss today, though, and we'll go over the trade that I took. And then price action was also choppy last Friday, too. So the market has just been pretty bad during the AM session over the past few days. Obviously, it's really easy to blame the market and not take blame for it. Me personally, I think I took a good loss this morning, and it just didn't play out for us. So we'll go over what trade that I took. So we had taken this daily buy side liquidity and opened up these new 4-hour imbalances, and I'm going to continue to be bullish, like I said, until we get higher time frame structure, higher time frame breakup structure to the downside. And right now we are still respecting every single bullish PD array that we come across, and literally like the next draws in liquidity are pretty much all-time highs. So we are just continuing to pump and pump and pump and pump and pump. So I'm going to continue to be bullish. And we had this 4-hour imbalance that I wanted to get bullish reactions out of. If we go to the 15-minute chart, now we just recently, like just now, came back down and tapped equilibrium, but equilibrium of this range lies within here. So we had not yet tapped into this lower 4-hour, and we were still holding this bullish 4-hour right here. And coming into market open, let's just mark it out real quick. Sorry, I already deleted all my drawings, and I was not in the mood to make a trade recap video right after I took the loss. Had to step away and go to the gym and get my mind right, because this one frustrated me a lot just because of the way that the market has been treating me, or the way that price action has developed over the last few days. So this would be our higher time frame 15-minute market structure shift. Market opens right here. This is the 15-minute high I would need to see the market close above in order to become bullish to this 4-hour buy side, and this would be our market maker buy model. So what I took was an internal model trade this morning, targeting this middle time frame, the 15-minute market structure shift high. So I'm going to go ahead and label this middle time frame market structure shift, and it's also internal buy side liquidity. So this was the area in which I was targeting this morning. We had originally come up and respected this bearish 15-minute for value gap. Pre-market, we displaced lower, respected this 15-minute, and started to make our way down to this sell side liquidity right here. And I was originally looking to take a trade here, but the internal liquidity had already been taken. If we go to the 1-minute chart, we had already tapped into this 15-minute imbalance and started to get bearish reactions and took the internal sell side liquidity. So at that point, I would need a higher time frame imbalance to open up again in order to target this resting liquidity down here. I wasn't willing to simply take a trade off of this random 1-minute fair value gap, like right off of market open. That's just something I'm not ever going to do. And then price ended up coming down and taking this liquidity down here. Boom. So we have our liquidity sweep on the higher time frames. We have come back down and remanipulated this low within the 4-hour fair value gap. And so at this point, if we start to get bullish reactions, I can start to target this high, which would be the market structure shift, which would then confirm the external model. So that's what I was looking for. This would be, so that's why it's an internal model. The internal model to this internal buy side liquidity, which would be the external market structure shift. So we came down, swept liquidity. Still expecting bullish reactions on the higher time frames. And if we go to the 1-minute chart, this is our buy side up here. Now, one thing that I've said in recent videos, if you haven't seen my my market, I think using the trade recap from Friday. In this scenario here, trading this internal model, I can't enter simply off of a CISD. I need to wait for that clear market structure shift, which actually gives me the confidence to target this buy side liquidity, because this is the, in reference to the lower time frames right here, this is the higher time frame liquidity that we're targeting. So we need to have confirmation of a clear market structure shift before targeting this high, because this is in reference to the 1 minute chart now, the higher time frame model in reference to the 1 minute. So in order to confirm this, I would need to see that market structure shift, and we actually ended up getting it. Stayed patient here. We came back down. We originally got this displacement up. There was no SMT, but I did not enter here. If we come down, because there's no market structure shift, I'm waiting to see that market structure shift to give me the confidence to target this buy side liquidity up here. And then we keep putting in swing highs. And at this point, you could say, I could have said, like, hey, I know it's a no news Tuesday. I should have recognized that, you know, the market was essentially just chopping around for the whole first hour, almost hour and a half of market open. But we did finally come up and get that market structure shift on the 1 minute chart. And in my eyes, the higher time frame bias, is still intact. There's still reasons for us to move up to this internal buy side up here. And once we get that 1 minute market structure shift, this clear displacement, I'm now confident that we're going to come up to this internal buy side liquidity. So I placed limit order right here, boom, at this 1 minute fair value gap. And I actually did have my stops right around here. Originally they were going to be down here, but this was the 1050 to 1110 macro whenever we got filled, and so I was expecting a quick tap and then us to come up to this buy side. So I did have my stops moved up a little bit right here. It was around a 2.4 RR trade, and then if we continue in price, we get tapped in right here, and we sell through it pretty much immediately, and then price would have continued to stop us out regardless of where our stop was. So we never came up and took this internal buy side liquidity. So yeah, man, that was the trade. I had confidence in this in going long right here, because of that clear displacement, clear market structure shift. And if we just zoom out, bro, like, the market hasn't done anything all day. All day the market hasn't done anything. So just bad market conditions in general. Yeah, these last few trading days have been tough. Or the last two losses. Yesterday was nothing, but yeah, I've taken 2 losses in a row. And hold on, my dogs are going crazy. But yeah, man, I just want to come on here, still give the market recap, and just say that it's never easy to take losses in the market. It never feels good. So no matter who you are, no matter what level of trading you are, taking losses never feel good. But it's how you deal with those losses is how your trading journey is going to be defined. Yeah, I mean, me personally, I don't think, I had valid reasons for this internal model to play out. The only thing that I can say in the future is to potentially scale into the seconds charts within this 1 minute fair value gap and wait to see that confirmation. Because if we had waited for confirmation on the seconds charts, we can see we would have just got ran through. But that also plays into the models inside of models, right? Because in this instance, the 15-minute time frame for this internal model is the high time frame. The 1 minute time frame is the middle time frame. We did get that middle time frame market structure shift, which is a plus. So then if we could scale into the seconds charts within the 1 minute chart, you know, potentially get bullish reactions here, like a market structure shift, enter something like this. Let's say we did get this reaction, still have our stop loss in the same place where it would be, but then at this point you can either take profits here, go break even here, and then you have a much better risk to reward to this high, and you have confirmation at the same time. So that's something to think about. Me personally, I haven't really done too much trading on the seconds charts. I don't typically love the seconds charts, but in a scenario like this with an internal model, I feel like that's a situation where it could potentially be called for. Treating the 15-minute, like I said, like the high time frame. Trading the 15-minute like the high time frame. We get bullish reactions on the 1 minute. This would be our middle time frame. Then zooming into the fair value gap, waiting to see bullish reactions. That's a potential, but I think in general this model typically will play out. I think this will typically play out. This typically does play out, and more optimal market conditions. And we were just really choppy today. So that's the loss that I took. That's the market recap for me, boys. It sucks, but all we can do is move on. So going into tomorrow, also peep Bitcoin at 107K. Going into tomorrow, we have now come back down and rebalanced to the equilibrium and the lower 4-hour fair value gap. Let me just turn the magnet on, get this in the right place. So the bias, higher time frame bias, is still the exact same. You know, we've rebalanced to inefficiencies, equilibrium now, and I would still want to see the same exact bullish reactions to the upside. So still bullish, wanting to see bullish reactions to the upside going into tomorrow, and continuing to be bullish until the higher time frames tell us otherwise. So that's going to do it for this one, boys. I appreciate you watching. I'll see you on the next video. Peace out.